in trading, that's probably one of the biggest challenges. Just because you sit there longer in front of the screen doesn't necessarily mean that you're going to come out making more money than if you were just there for an hour or two in the day.
So, Tim Racette, welcome back. It's been a while we spoke. August 2018 last time. So, how's it going today?
Yeah, thanks for having me. Good to be back.
Good to see you here. And I kind of want to talk about a bit of follow up since last time we spoke and some advice you're really good about in terms of talking about like trade development, improving your mindset, and also giving some tips for like new traders who are getting to trading to begin with. So, tell me a bit what's been going on since last time we spoke. What's been new, some updates, and what's going on?
Well, the last couple of years, we've as far as my trading itself is concerned, I haven't really made any changes, but we have seen more volatility, and there have been a lot more, I think, newer participants and newer traders getting involved in the markets with platforms like Robinhood and some of the ease of entry for folks to be able to trade. And some of that's good, some of that's bad. But by and large, the process of trading has stayed a lot the same, and just some of those external factors surrounding the markets themselves. When we're in a screaming uptrend, a lot of times volatility slows down or shrinks, and so sometimes the ranges aren't as big, and that's what we saw going into kind of pre-COVID. Smaller intraday ranges, which make it a little bit more limited for day trading opportunities. And then the pandemic happened, and all of a sudden volatility really increased, and more folks were at home. And then all of a sudden, there's a lot more opportunities intraday trading wise.
Has your trading changed in any way since like COVID, since that whole thing happening, since crypto started, or are you still doing the same thing as you did before?
Yeah, basically doing the same thing. On the intraday time frame, I'm mostly trading the E-mini S&P, and so sometimes you might have a 50-point day. Sometimes it might only be a 10-point day, but by and large, I'm looking for a lot of the same places to put on a trade. And if it's a smaller range, you just might end up with a little bit slower trade or a smaller winner. And if it's a bigger range day, then things might be happening quicker, and you end up with maybe a few more trades, or more likely, just when you do get in a runner, you're able to capitalize. So just because there's more volatility doesn't necessarily mean you have to take more trades. Over the years, I've kind of pared back and taken fewer and fewer trades, and then in turn seen profits go up. So it's sometimes it feels a little counterintuitive. You want to be there trading all the time, but you don't have to be.
So in a sense, you're kind of like filtering out the trades and picking the best ones.
Yeah, and that's something that takes time to go through. If you think about like swinging at baseball pitches, at first you kind of have to swing at everything when you're learning. Okay, oh, this is a fastball, this is a curveball, this one's high, this one's low, and so I want to frame and kind of set myself up for connecting with certain pitches that are going to be better probability of me getting a hit. And that might not be the same for the next guy or the next gal, if their style is a little bit different or their comfort level is a little bit different. But first, you kind of have to absorb everything and sit in front of the screen and sort of, practice taking a lot of trades before you can start filtering down, because they talk about intuition and a lot of these things that really take time to learn. But the way you get there is to kind of build a data set, or take a whole bunch of trades. It could be on a sim account at first, but work your way towards consistency by just committing every day to showing up, looking at the markets, placing trades, and then you can start to build that feel.
How do you personally do that kind of like filtering out? Is it based on like a journal or is it just based on your intuition? I guess intuition would be hard, but if you have some like stats or data that tells you which setup worked the best.
Yeah, the intuition really comes from the journaling or the trade log, however you want to compose it. I just use a basic Excel spreadsheet and just have a few notes from the day in there. And then I can go back and review the trades later on. And that's when you make observations and you start to see similarities. If you compare, okay, I'm going to look at a whole bunch of trending days side by side, or I'm going to look at a whole bunch of this specific setup that occurs, maybe in a low ticket lows, if we're talking about intraday ES trading. And then I'll look at all of those setups side by side and look for similarities in my winners, look for similarities in my losers. And that's when those observations start to present themselves. And sometimes you'll be in a trade and you'll have a feeling and you can't exactly pinpoint why you are feeling that way. But a lot of times it's because there's an observation that you're subconsciously processing, but you haven't quite been able to consciously pick it out yet. So I find that looking at a lot of your trades and reviewing them is a good way to kind of build some of that book or similarity profile in your mind.
That's good advice for sure. Now, what would you tell people who've been into trading for like, let's say they started like 2, 3 years ago, or even in the past year, where we have like a big bull run, they make money so easily and they think it's going to be the same forever. What advice would you give them to be able to kind of adjust to normal markets when that kind of bull run ends?
Yeah, I mean, it's not going to be like this forever. And it's easy to make money in good times. Everyone's making money in Tesla, whether you're a trader or you're just sitting on side as a buy and hold investor. So anyone who, if you think you're a top dog, just check your ego a little bit, because it's very easy to start going from 2 contracts to 4 to 8 to 10. All of a sudden you're trading 20 ES contracts, and then the market changes and you just drive yourself into the ground. And so if you can make a ton of money in a short span of a nice bull run where you have clean charts and good moves, great. And then I would it's okay to scale back. And when you're scaling up, like if you are increasing your size, your position size, or your contracts, wait till you go through a little bit of a drawdown. I find that works better than, you have a really good run and you continue to double your size. Because sometimes you can just double your size right before a more bearish time or a more challenging time. So go through your trade log and look for like your biggest drawdown period. What was the worst kind of dip you had throughout the year? And then you can kind of use that as a reference point to say, okay, well, I had a string of 6 losses and, at 4 contracts, this is what it came out to be. So if you start to see those similarities in the future, you can at least have a little bit of a red flag. And then the other thing I find important is if you're having a rough day or a rough week, you have to have some threshold to cut yourself off, because it's a lot easier to have a crappy Monday, Tuesday, and just call it a week and come back the next week. You kind of forgot about it and you haven't really done too much damage than if you keep trying to dig yourself out of that hole. And now you end up having a really bad week, and all of a sudden it screws up your month, and then your whole year is shot because you're just digging this deeper hole. So better just cut your losses and move on than try and dig yourself out right then and there.
That's very true. So you have these people who either like blow up an account in a week because they kind of do too much, they try to trade too much and get back on track. But that role we help a lot of people to be able to kind of take a break but come back next week in a better mindset. Sure.
Yeah, I don't think you necessarily have to have it's okay to have a small trading account just as a fail safe. If you only have a couple $1,000s in your account and you're trading 2 contracts and something major happened, you're only going to lose that amount theoretically. But at the same time, yeah, you want to have a written down or set your stop with your broker that, okay, after this dollar amount loss on the day, I'm going to be done. Because sometimes you can get into an emotional state, and it's a lot harder when you're in the moment to follow some of those rules. So luckily I had that ingrained in me pretty early on. And so I haven't ever blown up an account and have had quite a bit of success just kind of hitting singles and doubles and getting the occasional home run. But if you're kind of constantly swinging for the fences, you can have a lot of ups and downs, and it can be emotionally very difficult.
Yeah, definitely. Now, whenever I look at your content and what you do online and on YouTube and things, I always hear about mindset a lot. And what makes you want to kind of talk about mindset so much? What do you think is important about mindset that people have to understand as traders?
Yeah, I think, with everything that we do, my background outside of trading is in kind of competitive sports and specifically mountain biking. And there are a lot of parallels with, successful people, successful businesses, and the way people operate to attain goals in general is, built on the same foundation of, okay, making small decisions every single day that help bring me closer to my goal. So breaking things down from the bigger picture goal, the long term, and breaking them up into small bite-sized chunks. And all of that starts with, your mindset and your attitude, so that you can get over those bigger challenges with small bite-sized pieces. And so when it comes to trading, I find it's, the exact same thing. We need to be able to understand ourselves so that we can better not overreact to certain trading situations. And when you get into challenging trades or things where you have to, make quick decisions, you're practiced and prepared so that you can make the right decision, or at least make a decision that's not going to cost you. It's okay if you make the wrong decision, but you have to be able to then respond with another decision to sort of correct and help you stay on track.
So this is going to be a broad question, but how would you define the mindset of a successful trader? What does that look like? What are some of the traits traders have, or what is it in general of being a good trader?
I think for me, I put a lot less focus on like dollar goals or reaching certain um, monetary goals specifically with my trading. Because if you think about, okay, what are the things that I can control? Well, I can control where I get in my trades. But then after that, I can't control if the market goes up or down. So I can put stops in, and I can put, a small first target in to kind of, get a couple of points to help smooth out my P&L curve versus just sitting there and waiting for a home run every day. But if you kind of focus on what you can control, which would be, trading your strategy well and being as consistent every single day or week that you are trading, so that you're looking for the same things. You're managing the trade the same way every time. And you're not worrying about, well, this last trade, was a big winner. So then I'm going to change my strategy for the next time so that I trail my stop and try to stay in longer, because then it ends up going a couple points and reversing, and you say, oh, I'm going to change it again, and I'm only going to take a 2-point target and I'm going to exit the whole trade. So you have to be really consistent with your exit approach so that you don't start to, get in your head and think, I have to make all these changes. I mean, in the last 10 years, I've essentially traded the exact same way with, I used a 1.5 point stop and I moved it to 2 points, maybe 3-4 years ago. But, very minor tweaks. The general strategies kind of stayed the same, and you just kind of plug along, but without having any major, serious drawdowns. You can have some bumps along the way, but in general, kind of keep your net worth projecting up. And so being consistent, showing up every day, and the goals of, okay, I need to be trading, looking for good setups and focusing on kind of the mechanics, as opposed to, okay, I want to make $1,000 today. You can start to shift away from good trading and start making bad decisions. And you might get lucky a couple times, but unless you get really lucky and, make an amount of money where you can kind of shut it down after that, then you end up trading those same bad habits. And then you just, I've seen guys in the pits go from, nothing to millions of dollars, and then they're trading it away and they're back to nothing.
A lot of people I talk to have a big issue with discipline. Like they know what to do, they have a strategy or some rules to follow, but they cannot seem to follow them. So what would you tell them to do to be able to fix that?
I think the number one thing or that's challenging for most folks is the consistency, and just the basic consistency of showing up every day and being able to trade. I don't trade every single day, but I'm pretty much here most days. And, when I got started, I was young. I didn't have a lot of, obligations and responsibilities. So I could be there every single day. If you're, middle-aged with a family and you're already have a job and you're sort of trying to add trading to your, income potential, then set it up in a way so that you can be consistent. Make it only an hour a day in the morning that you're going to watch the markets, but then be consistent and be there every single day. If you look at going back to the athlete analogies, runners and basically all athletes, you don't start training for a marathon by running a marathon. In most cases, you start with little bite-sized chunks. So if you can just go out every single day and follow a kind of a smaller training plan that's going to get you to run that marathon, it's a matter of like running the marathon is accumulation of all those small days of doing 1 and 2 mile runs. And I think trading ends up being the same way. If you just look at it as, okay, I want to be trading 20 ES contracts and making $250,000 every single year, it can be overwhelming, and you think, well, where do I even begin? But instead, if you focus on, okay, this week, I really need to focus on just if I'm in a trade, I leave my stop alone and I break my bad habit of, getting rid of my stop or widening my stop. And then you just kind of go one by one and break some of those habits. And then all of a sudden things start to click. And then that intuition, because you've been in front of the screen for a long period of time, starts to give you maybe you take a trade that ends up being a winner, and you pass on a trade that ends up being a loser. And all of a sudden your P&L starts to become more in favor.
At the same time, though, if you think about like an athlete who goes to the gym or goes to training every day, they're like disciplined, do it every day no matter what makes it that, let's say, a trader cannot be disciplined on the rules, but the athlete can? What do you think is the difference there?
The mindset and motivation is definitely a big part that makes you want to be disciplined. You got to have, that why, or that reason that you're doing it. But even in the case of, an athlete going to the gym every day, the discipline just means you show up and you do the work even when you don't want to. So sometimes it's just a matter of doing that first set or doing that first interval. And, there are times where it's okay to shut it down and, take a break, not trade for the day if you have a lot going on outside of trading, and there's, just all kinds of things that can really impact your mental state. And just being conscious and aware of, okay, this week is going to be really stressful at work. I probably shouldn't add more stress by trading, or, I've got family stuff going on, your kid's sick or whatever else. Planning those breaks, to, again, go back to the athlete analogy, planning that off season, planning those mid-season breaks gives you a lot more longevity than just trying to push through the entire time. So, a planned break is part of the discipline. Okay, I'm not going to trade. Last week and a half between kind of Christmas and New Year's and leading up to Christmas, I planned to not trade and not look at the markets. And you get recharged, and then you can come back in the new year, and your new year starting fresh and off and running again.
Yeah, good point. So then discipline would be kind of like a habit. The more you do it, the more you can do it more, basically. So if you're not disciplined, you never do it, then it's really hard to do after.
Yeah, and I mean the discipline, you have to commit to the goal, and then you want to build that consistency by showing up. And then in being consistent, that's when you start to build confidence. Okay, it's been, a month, 3 months. I've been, first I just walked into the gym and I kind of walked on the treadmill for 15 minutes and walked out. Now I've been doing that every single day, or, 3 times a week for a month. Okay, now I'm consistent. And now I'm starting to get a little more confident. Okay, I can walk in the gym. I know where the locker room is, and I know, hey, I met a couple people, and I've got a training plan that I'm going to start following. So you go from this, okay, I committed, and then I built some consistency just by getting my foot in the door, and then now I'm starting to grow my confidence, and then you can really grow, and then all of a sudden it's like, oh, I'm disciplined without really thinking about it.
Good example for sure. Now, what would you tell new traders who, let's say they start trading, they're looking on YouTube or somewhere else, and they're like all confused, all overwhelmed by all this information there? What would you tell them to focus on to be able to start on the right track in trading?
Well, again, YouTube is can be good and bad. If you think about, you want to build a house, you can find a YouTube video on most things that involve building a house. But some people are just more some people are just better with their hands than others. And so some people probably shouldn't be working with tools and electrical and plumbing and whatnot. And so if trading is something that I think you have to step back and determine, okay, is it trading that I really enjoy, or is it just having a bunch of money that I'm looking for? Is it having more time? Like, what is it that you're looking for? Because you can go out and buy a, Dunkin' Donuts franchise and hire a staff to run it for you, and you can sit back and collect paychecks with, relatively little work. That you can, build a business and build it out in such a way that it becomes passive. There's lots of ways to generate money. But if your goal is, oh, I want to sit here in front of the screen all day and master trading, that's a little bit different than I want to free up my time because I don't like my job and I want to be over here spending time with my family. So I think just like if you were going to become a lawyer or a doctor, I mean, there's all this time and commitment up front, just like with trading. And it's easy to go online and find a video of someone trading, and John Carter's a great one when you see his $1 million trades, and it's like, oh yeah, it's just that easy. Well, it took a lot of time to get there, and there are very passive ways to be an investor and grow your money and have that money be working for you. So limiting your time trading, I think, is important. And you can do a lot with a little. Less is more when it comes to trading. If you're only going to trade for an hour and a half or 2 hours for a day, that just limits the amount of time that you can, damage yourself or potentially have a hiccup and lose money. So starting small and making it integrating it into your lifestyle so that you can be sustainable with it versus, saying, oh, I'm going to quit my job and I'm going to immediately start learning trading and doing this full time. Not always the best approach. There used to be a lot more prop firms and places where you could go, work for a company, get a salary, or have some kind of profit sharing and make a little bit more of a traditional career out of it. Whereas now maybe you're working from home, you've got some flexibility. your kids are in school or you're single, and so you have the time, but it doesn't necessarily mean you should just trade all day long, through the night and be all consuming.
What about for the strategies? Do you recommend people to kind of find a strategy online and copy someone else, or use something that they find online, or that they create their own thing and they create their own strategy that they think of themselves, or how should they go about this?
Simple is best. So you don't have to reinvent the wheel. There's a million and one strategies out there, and a lot of them on their own are just fine. But it's when you start complicating it and combining 5 different strategies into one that it becomes you kind of start limiting yourself, or that paralysis by analysis. So keep things really simple. If you like fibs, you can use fibs. If you like moving averages, you can use moving averages. You just have to understand the context. Think of a strategy as like you're putting on glasses and it's a lens to look at the markets. You could just look at price action, just look at the candles and basic candle charts. You could just buy every day at the open when this happens and sell every day at the open when this happens. So if you can find someone who, in anything that you're doing in life, it's helpful to find someone who has the thing or is doing the thing that you want to have or do, and kind of apprentice under them, just like you would if you were becoming a plumber or a tradesman or anything like that. So if you can find someone who's trading something that resonates with you, that would be a good place to start. But you don't have to overcomplicate it. And sometimes the more you learn, the more you can become stuck, versus just keeping it super simple and kind of repeating it as best you can.
Interesting, and definitely good idea of like not making things too complex and not too many like factors or rules for sure. I'm curious to hear about your New Year sort of routines. Are you someone who kind of likes to set goals when it's a new year, or how do you work this out with like trading? Can you set goals for trading, or do you not set goals at all for trading?
I'm definitely goal oriented. I don't necessarily use the new year as always the starting point, but I like to focus on growing my net worth. And so there's again a million and one ways you can make money or grow your net worth, invest. Some people are in favor of debt, some people are not in favor of debt. You could be a Robert Kiyosaki fan, a Dave Ramsey fan. There's a million and one different ways to go about things, but I think if you focus on growing your net worth and growing your cash flow, then that helps you set goals for your trading that can be a contributor. So chances are you're probably not going to quit your job and start trading, in the first month, or probably not even in the first year that you start trading. So if you can have specific goals for trading that help you, grow your cash flow and your net worth and grow your ability to trade, then just understand, okay, that's a little piece of the bigger picture. So it's helpful to, create a list of mistakes that you've made and make goals, not to repeat those same mistakes over and over again. That's an easy way to cut out some losses. And then, you can say, okay, well, I'm going to start trading, 2 micro contracts at the start of this year. And then I'm going to work my way up to 4 and to 6. And then I'm going to get to, the regular ES contract. Let's say if you're day trading futures, or I'm going to work on growing my stock trading account so that I can go from, trading $10,000 to $50,000. And, okay, in order to do that, if I'm trading this size and my average trade is returning me $200, okay, how many trades am I going to have to make to be able to grow it in that way? So I think looking at like your average trade or your expectancy is a helpful metric, and looking at your reward to risk. So your R multiple, like if I'm risking $100, am I making, $5 per trade? Am I making $100 per trade? So is it 1-to-1? Is it 2-to-1? Is it, negative where it's not even 1-to-1? And those kind of metrics can help you set some goals to kind of reach that bigger picture of ideally having the cash flow so you can free up your time to be able to do more of the things that you enjoy.
Yeah, and this is big. Like you mentioned, you got to understand what's a good goal for trading and like what's just like a knock-on goal. Like you cannot force to get $1,000 a day or whichever. So you gotta have a goal that's in line with trading and what you can work on, what you can do. I think what you discussed is really good. Things you can really actually work on and take action on. Really good.
Yeah, and trading, like, the hustle is not always beneficial. If you're a salesman or you're, hustling in other areas of business or life, you can work more and a lot of times get more return. But in trading, that's probably one of the biggest challenges. Just because you sit there longer in front of the screen doesn't necessarily mean that you're going to come out making more money than if you were just there for an hour or two in the day.
I notice you're not a really big fan of trading books, or you do recommend some books, but more about like the mindset, the process. Why is that? And do you have any books you want to recommend the viewers that they can read on at the beginning of the year?
I think the Annie Duke has a good book called Thinking in Bets. Not directly a trading book, but kind of she's comes from more of a poker background, and that helps with mindset. There's a really good book. It might be a Kindle only book, but by Harvey Walsh, Brain Hacks for Traders, that I really like. It has a lot of stuff that I use in my own trading, and so it's easy to just reference that book, and it's a pretty easy read. But there's a lot of more direct trading hacks and tricks in there that can help build some of those habits and that discipline and the consistency. So those are probably the two that I'd recommend at the moment. I also like Peak Performance by Brad Stulberg, I believe. That's another good like high performer book. And okay, what do all these high achievers, high performers do, and what habits and traits do they have? And you find that it's not that they made one decision that completely changed their life. It was more of a lot of little decisions that you can just, okay, today, if I'm 50 pounds overweight, I'm just going to go walk to the end of the block and back. And that's your achievement for the day. And then, by the end of the week, maybe you're walking 2 blocks, and then pretty soon you're, walking a mile, and then eventually you're able to run or jog, and, little by little is how you get there.
Do you feel like you're getting more out of non-trading books compared to trading books that discuss like setup or things like that? Or is it the same, like different books for different people or different stages?
Yeah, I do at this point. I mean, Trading in the Zone is a good book, Mark Douglas. Um, I don't read a lot of like specific strategy books just because I've been doing this for a long time. And even early on, you find something that resonates with you, and then you got to just put it into action. And I think that taking action is the killer for most people. You can read and watch videos all day long, but if you never actually swing the hammer, like you can watch a video on how to hammer a nail, and you can do all the physics and look at like, okay, this is how I'm going to hold the hammer. And you could teach me all about the mechanics of it. But if you don't actually hit the nail with the hammer, you don't get that real experience and that feel. And so do some learning, but then put it into practice and kind of like make a circle of, okay, I do some learning, I practice it, and then I get some feedback, and then I just keep that circle going of I learn, I practice. Okay, what did I learn from practicing? And then I can continue on and on.
Very good advice for sure. So when can people find you if they don't connect with you or reach out after the interview? When can they connect or learn more about you?
You can always shoot me an email, Tim at eMiniMind. I'm on Twitter at eMiniMind. I'm not super active, but I've got a Discord that we kind of chat with some traders throughout the the trading day and throughout the week. But yeah, email and Twitter are probably best.
Awesome. Thank you, Tim. It's been good for our viewers, I'm sure. I think people will get a lot out of this interview for sure. A lot of good advice you can apply right away. And look forward to catch up with you pretty soon.